line of credit starting at $100,000. You only need a 650 personal credit score. Now, in today's video, we have an absolute game changer. I'm gonna be sharing with you over 300 companies that will give you money to grow and scale your business. Now, usually when consumers or businesses are looking to get access to funding, you might go to a credit union, a major bank, or even a credit card issuer. Now, one of the next big movements in the funding space is going to be private credit. Now, what exactly is private credit? So private credit are going to be loans made from non-bank lenders to entities, whether that's a corporation, a small business, or even a consumer. So when you think about private credit, these are going to be non-bank types of lenders, so non-depository types of institutions. Now, according to BlackRock, private credit assets under management are set to almost double by 2028. And in 2028, it's projected to hit about 3.5 trillion. Now, a lot of y'all are familiar with private equity funds. On the other side, you also have what's called private credit funds. So private credit funds pool money together, and instead of buying percentages or equity stakes in companies, private credit funds will purchase corporate loans. So they buy these performing loans or loan participations, which are fractional shares of loans. Now, just to sort of illustrate the difference between equity and debt. At the top, you have asset-based loans, senior secured debt, senior unsecured debt. You also have subordinated mezzanine debt. So mezzanine is basically in the second position, or it's subordinate to senior debt. And then you have these two down here, preferred equity and common equity. And then one thing to remember is that debt gets repaid before equity. Now, one way that you can get access to billions of dollars is through the SBA Small Business Investment Companies. Launched in 1958, the Small Business Investment Company program has a long history of success, helping small U.S. businesses access long-term patient capital for growth and job creation. Administered by the U.S. Small Business Administration, the SBIC program utilizes the talent of experienced private investment fund managers. According to data compiled by the SBA, as of 2024, the SBIC program has deployed more than $130 billion of capital, made 194,000 investments in U.S. small businesses. Now, there's several types of SBICs. So you have the standard debenture SBIC, and this is designed for mezzanine and private credit investment strategies. There's the accrual SBIC, designed to support longer-term equity investments. Then you have the reinvestor fund of funds SBIC, and this invests equity in underlying funds that support small businesses and startups. Now, the SBIC is licensed by the SBA, and pretty much what they do is they pool private capital, and what SBA will do is give up to a 2 times match on the private funds that are raised. So usually how this works, a licensed SBIC will create a fund. This fund raises money from private investors. So usually it's going to be accredited investors. That money is pulled into a fund and then reinvested. And so they can take on different types of investments, whether that's equity, debt, a hybrid, or a combination. Now, the SBA has a directory of licensed small business investment companies looking to invest in U.S. small businesses. So pretty much you can search based on where you are geographically. Now, right here is a list where they'll pretty much give you some idea of the investment strategy, the average investment, and the size of the overall fund. And so some of these funds have hundreds of millions of dollars. SBICs are eligible for a match of 2x private capital raised up to a maximum of 175 million. The SBA will come in and match them 2 times of what's raised privately. So this is literally giving these funds more leverage to then go out and invest in small businesses. And these investments can be either equity investments or debt investments or a combination. Now, right here, I have a list of over 300 plus licensed SBICs from the SBA. Now, they have different investment strategies. You have buyouts, direct lending, early stage, early venture, growth equity, a hybrid of debt and equity, mezzanine, multiple, as well as venture. So you can sort this list based on the type of investment. Now, we usually just talk about direct lending, but they have a combination of different investment strategies depending on whatever that fund's focus is. So just to kind of give you a layout of this spreadsheet, Right here in column A, you have the name of the fund. You also have the city, state. There's also the manager of the fund size. So this is another thing to keep in mind, right? The size of the fund, as well as the average investment, right? Now, one thing about a lot of these funds is that some of them do target slightly larger businesses. So as you can see, I've sorted this by average investment size, starting from the least to the greatest. So as you scroll down here, the average investment size actually is increasing substantially. And as you can see, some of these funds, have hundreds of millions, tens of millions of dollars, and various different investment strategies. Now, again, this falls within the private equity, private credit space. As you continue to scroll, you'll see that there's contacts for these different funds, including emails of key personnel within investor relations. And you can also check out their website. We've included links, but I did want to just go over a couple of examples. I've already sort of highlighted these. So Business Consortium Fund provides accessible and affordable loans. So they have a business term loan, and then they also have a business line of credit starting at $100,000. So as you can see, starting at 50,000, starting at 100,000. Now, real quick about the Business Consortium Fund, their mission is to expand capital access for small businesses across the United States to advance a more inclusive and equitable society. BCF is the only CDFI focused on supplier diversity. They facilitated over 230 million loans to nearly 1,000 MBEs, and all loans have been made to historically disadvantaged business owners. Now, here's the basic qualifications. So the business must have 51% ownership held by MBEs or socially and economically disadvantaged entrepreneurs. A BCF's loan program are designed to promote economic prosperity through fostering a more inclusive economy. Business owner must have at least a 650 personal credit score, 3+ years in business, over $150,000 in gross annual revenue, positive cash flow, and business to business and or business to government model. Another certified SBIC is called Live Oak Ventures. So they do seed, Series A, and opportunistically pre-seed and growth. And the initial check size ranges from a minimum of $500,000 up to $10 million. Another certified SBIC is Source Capital. So Source Capital provides flexible equity investments and creative debt capital solutions. They have over 300 million of capital. They are SBIC licensed. They do cash flow lending, ARR lending, sponsored and non-sponsored, as well as debt with equity co-invests. Another great example is the Small Business Community Capital. So Small Business Community Capital 2 is a SBIC impact fund that provides customized capital solutions, including senior and subordinated debt and equity capital. They invest in small and lower middle market companies in the United States. Another certified SBIC is UMB. So UMB provides personal, business, and commercial financing. Now with UMB, you could actually apply for term loans, lines of credit, and commercial real estate loans online. Now, when you add up the total fund size from all SBA certified SBIC small business investment companies, we come to a grand total of over $44.5 billion in capital. Now, the SBIC program was founded back in 1958, and pretty much they're here to support investment into small business, and they do so by encouraging private capital. So what happens is you have these private equity funds, private credit funds, they're able to pull in private capital, and the SBA will do up to a 2x match. So what this allows these private equity and private credit funds to do is have more leverage when investing in small businesses throughout the United States. And essentially what the SBA is doing is lending money to these private equity and private credit funds. The private credit funds and the private equity funds are either relending or reinvesting in small businesses. There are literally billions of dollars available for small businesses to grow and scale their business. Now, if you're interested in accessing some of the certified SBICs, I've dropped a link in the description of the video where you can access these different SBICs and you can see what their investment strategy is. Some of them offer equity, some of them offer debt, some of them offer a combination. I've included the contact email, phone number, as well as the website for you to check out. Anyways, that's all for today's video. Let me know your comments and questions down below. And until next time, take it easy and we'll talk to you soon. Peace.